Good evening, everyone. Welcome to the very first session of our international webinar series for the artificial intelligence. And today's topic is AI in banking. And let me please give a brief background information about our precious guest, Kurt Mäder. Kurt had his major on theoretical physics and had his research in physics. And then he has a background of IT consulting and software engineering, who has also demonstrative experience in banking, is now the owner of KAM Advisory Company, is also the chairman of the board of directors of AI Business School. He will give details about his own AI journey and the AI implementation in banking sector. So again, hello, Kurt.
Hi, Fulia. Hi, everybody. Thank you for the nice introduction. I'm looking forward to this talk, and I hope that at the end of the session we will have a lot of questions by the users and discussion about this very exciting field. Well, as you mentioned in your introduction, I'm a physicist originally, and when I was doing my PhD more than 30 years ago, actually, I was very interested in neural networks and neuroscience, and I even considered doing my PhD thesis on neuroscience. However, my professor, he advised me to choose another field that looked more promising, so I chose quantum physics and computational physics instead. So not so far away with computational physics, but nevertheless, my curiosity about AI has already quite some years. And actually, much later, when I was chief operating officer in a bank, we were running a very large digitalization program to renew the full e-banking, mobile banking infrastructure. And that was about 5 years ago when we thought about how we should do the fraud detection of payments. So you know that there are a lot of cyber criminals around that try to fraud payments, to send it to different people and kind of hack e-banking accounts. So we decided to use machine learning as a fraud detection system, and that was a very interesting experience because traditionally fraud detection would be done using rules. So you would implement rules like if a payment exceeds the amount of, I don't know, $10,000, then maybe you should verify with the customer before you send it away. Or if it goes to certain countries, then you would also check if the payment is really true one. But rule-based has a lot of advantages. It's very fast, it's very reliable, but it's not flexible. And machine learning, of course, is very flexible. So the idea is to kind of learn the individual patterns of the banking customers, how their payments are done, what are their typical payments, and to distinguish suspicious payments from the real payments. So basically, this is an application of supervised machine learning. You train the machine learning system, and whenever the system detects a payment as a suspect, maybe a suspicious fraud, let's say somebody who never does any payments to another country than his own country, and all of a sudden there is a payment from Switzerland going to England, for example. So this kind of is not typical and does not correspond to the typical pattern of the customer. So then maybe you would call the customer and say, "Is this really true payment? Did you want to do that payment?" If he really wanted to do it, then maybe next time, maybe a year later, he again has a payment to England because he went to vacation there. So the system already knows, well, that seems to be okay. So that's very promising. Of course, it sounds easier than it actually is because you need a lot of data to train a machine learning algorithm, and we're using real life payment data. Well, luckily enough, there is not so many frauds. So actually, it's difficult to have sufficient data to train the system to distinguish fraudulent payments from good ones. So that was one challenge we had, and it took several months of training, and we were running old detection systems in parallel to the new one, just to be sure not to take any risks. But after several months, the system learned and it started to produce much less false positives, which are annoying. You don't want too many false positives. Over time, it really learned, and it still was finding the fraudulent payments with a very high accuracy. So that was really an eye-opener for me. It was a big success story. Even it's a very specialized field, but it's getting more and more important in times of increasing cybercrime, where cyber criminals get more and more professional, better organized, and so forth. So I think this is very promising. Actually, artificial intelligence can be used in almost all areas in the banking value chain. It can be used in processes in the back office. It can be used in compliance. It can be used to help with investment decisions. It can do customer interaction. I will give some examples later on. And why is it so well suited for the banking or the financial business? Well, actually, banking has been for a long time and still is, and even getting more and more. Essentially, it's a digital business. Banking is all about information. It's about gathering information and data. It's processing data, it's storing data, it's transferring data to somewhere else. There are no tangible products in a bank. It's all digital and has been for many years. And also most transactions in banking are from machine to machine. I mean, for example, let's again take the example of payments. Typically, in payment transactions, you would have payments of more than 99% of all payments just go from machine to machine without any human intervention. In general, most banking transactions actually don't need or only need very little or manual or human intervention. Of course, there are some very important ones that need the humans, like advising clients, explaining complex banking products, taking investment decisions, or assessing risk, different types of financial risk or other risk or compliance risk. So of course, even if it's maybe a small number of transactions, but the ones that are still done by humans are still very important. So what can AI bring to the table? What essentially new elements can AI bring to the table in addition to the traditional algorithms and rule-based data processing? Well, actually, it's all the fields where in the past humans used to be much better in doing the job than machines. So typically, these are situations where you have to deal with uncertainty, where you have to take decision if there is only little data, little information available, or if data is incomplete, or if it's of low quality, or if the environment changes, the situation changes. So I think these are all areas where the human mind, the human brain is extremely good at. So that's really the interesting fields where AI can help even automate further the banking business. Of course, there are always exceptions. For example, there are legal regulations that require a bank for certain transactions or for certain contracts that a person, flesh and blood, a person takes the decision and signs some contract or signs a decision. Why is that? Because a person, you can make a person accountable. You can prosecute a person. You can put a person to jail. I've never heard of a robot or an AI going to jail. So that's another field. Maybe we can touch on that later on a little bit. So whenever there is accountability, legal accountability, typically it's even not possible today to use artificial intelligence. So maybe I'm going to talk a little bit about some good examples of use cases that illustrate, from my point of view, the high potential of AI in banking. I start with a rather simple one in a way, that would be robot process automation, or RPA. So we're talking about software robots instead of physical robots, but they share something in common. Software robots and physical robots, they both replace humans doing a particular job. So in industry, in a manufacturing hall, it would be a physical robot, assembling pieces like a human would have done. Similarly, a software robot would perform jobs that the human usually did, and typically these are routine, repetitive tasks with some flexibility, but maybe not too much flexibility. So you find this type of jobs, for example, in a back office, let me give you one example. You collect information about your customers, corporates or persons over the internet. You put together this data, maybe you feed the data into the banking system, into ERP of the bank, or you hand this information over to somebody else, another robot or a person. So this is something a software robot can do very well, very fast, and can do it 24 hours per day, 7 days a week. But also in the front office, there are processes that can be done by software robots. For example, I think about client onboarding, where you need to make sure that you get the passport of your client, you get some documents signed, you put them together, you scan them, you forward them to somewhere else. So again, these are tasks that can be automated using robot process automation, RPA. Now it gets much more exciting if you add intelligence to those robots, because just to do repetitive tasks, you don't need too much artificial intelligence in a robot. But if you add, for example, something like natural language processing and semantics, then you can even start interpreting or understanding documents like a loan contract. You can check documents for plausibility. Do they make sense? Are they coherent, or is something really kind of out of order? So there, you start getting much more value out of a software robot if you combine it with AI like NLP, natural language processing, or semantics. Also, a very important field in banking is the prevention of money laundering. So this is called the anti-money laundering systems and methods, AML. And the two basic pillars of prevention of money laundering is that requires the bank to know precisely their customers and to know for each transaction what the reason for the transaction is. So for example, if a customer comes from a so-called high-risk country, which is maybe on some sanctioned list of the United Nations or some other list, then banks have to be very careful and check really this person. So this is also an area where you can use artificial intelligence. For example, if you have a payment going from company A to company B, and company B is maybe in a country that is considered high risk because of corruption or something like that, then typically they require the customers to provide them with contracts. So what is the contract, which is the basis for this payment? And this is actually a lot of work. I mean, you have compliance officers spending hours sometimes, or even days, gathering information just to make sure that one single transaction is really lawful and is not suspicious about being used for some other purpose. So there you can use artificial intelligence really to kind of scan contracts and see if they make sense or if they contain obvious suspicious elements. So this is another area where AI can really generate a lot of value. I mean, some solutions already use something like reputation scoring. So you score people's reputation. This is there is one system called Identity Mind that already provides such a service. Or others, they use extensive techniques for biometrics, for customer identification, for example. Who would be an example for that. I think that's a very promising start where we'll see a lot of progress in the near future. Another extension I can think of would be chatbots. That is also kind of a software robot. I mean, everybody knows chatbots. You find them on almost all portals now. So it's getting more important in banks, also in mobile banking or on web portals for banking. You can use semantics to understand what the customer wants. You can even use mood detection to see if your customer is angry, if he wants to yell at somebody, or if he is happy and wants to thank somebody for a good system, a good service. So I can think of one example of a very powerful chatbot or actually it's a virtual bank teller. It's called Cora. It's of the Royal Bank of Scotland, and it's a humanoid avatar talking to the customer and just conducting a very natural sounding conversation. So the customer is really free to talk about what kind of service he wants, and this virtual bank teller really understands what he wants and can react in a very natural way to questions and answers of the customer. So maybe we're already getting a little closer to having some chatbot passing a Turing test. I don't know how far away it is, but it's quite impressive. So far I gave you some examples that they are mostly about optimizing existing products or processes by using AI to make processes faster, more reliable, easily accessible or available 7/24, and to make less errors to increase the quality. Also, you can save costs. So that's, of course, also very interesting to save costs and maybe have higher margins or lowering prices for customers and be more competitive. But I think that the real value where it really, where you really start getting a lot of value out of AI is when you think about new products and new services, or even new business models that would not be possible without AI. So some examples, for example, in the credit and loan area is Lendo, which is a platform, for lending money. It's a Singapore-based fintech, and it assesses the creditworthiness of customers by generating a credit score, and that's basically based on the digital footprint of the person. So checking social media and things like that, and so even for people who have none or a very small credit history, they can still generate a creditworthiness score. And I think that's a very interesting idea, especially in emerging markets. There are many countries in the world where people don't have bank accounts, or they really don't have a credit history. I remember when I lived in the US for a couple of years when I was very young, and it was very hard to get a credit card because I didn't have a credit history. So I think, and this is not really an emerging market, right? So I think there are really some applications or some new products that are entirely based on AI and would not work without AI, that really generate very promising opportunities for new products and services. Also, for example, when you use AI to take decisions or to assist humans in taking decisions like investment decisions. So if you want to decide whether you should invest in shares or bonds of a particular company, traditionally you would have analysts who collect a lot of data about the corporates, analyzing the annual reports, financial reports of the company, to analyze media releases and news letters, and then make recommendations, give ranking and scoring to these companies using data, using a lot of their own experience, using gut feeling. The good analysts, they really also develop a good gut feeling for investment opportunities. But now, of course, we have the problem of ever more data. The amount of data is growing exponentially, so it's getting more and more impossible to collect the data just by humans. And also there is more data that can be harvested and can be used. So now we are entering the field of data analytics, of big data. So I know one company quite well, which is based in Switzerland. It's Santify. They use real-time data from a vast number of sources, from social media, from any other sources, news channels, Twitter, and so forth. And they use machine learning to extract information that may be relevant for some investment decisions for some companies. So they even discover new new correlations by using time analysis and so forth and machine learning. So you could say that basically the human information gathering and the gut feeling of an analyst is replaced by data science and by artificial intelligence, by sentiment analysis. Yeah, well, I think AI has the potential to change almost all elements of the value chain of the financial ecosystem. Just for, like some examples I gave, it can make a lot of processes much more efficient. It can help to save cost. It can help to offer more choices to customers. It can increase quality. So I think that can really change the sector. Especially when you think about new products and new services that are based on AI and innovations that are really driven by AI, like for example crowd lending, where you use artificial intelligence to kind of put together investors and people that have a business idea they want to be financed. Or if you fully digitize entire customer journeys, for example, in the area of mortgage, you could digitize and it's done. I know some examples that do that. Then if somebody starts dreaming about owning a home, an apartment or a house at some time, even then a bank can start to kind of accompany this person and to find an object to buy, financing the object along the full life cycle until maybe selling the house again 20 years later, I don't know. So there you can use AI to really, to manage a customer journey and to help the customer to take good decisions and to help the bank also to take good decisions about risk and credit and so forth. So, or thinking about biometrics, I think one particular fascinating example to me is the Smile to Pay, which is a service offered by Alibaba from China. So where you authorize a payment just by looking into the camera and give a smile, and it's very reliable. You cannot trick it, even if you put on different hairstyles or you change your makeup or your glasses. It's very robust, very reliable, and very simple to use. So these offer exciting opportunities. And then, of course, there's the area of fully digital business models, so-called neobanks. So that are completely new banks built, out of the green on a new digital business model, applying also artificial intelligence and machine learning and so forth. There are new banks like the New Bank in Latin America that's become very big, or N26 that's quite successful in Europe, or Revolut. I think many people know. They started with payments and credit cards and so forth, but now they do almost most of the banking services. So there are new banks. So they clearly changed the banking sectors. And maybe the last example would be the big tech companies, the Googles and Tencents, Alibabas and Apples. That almost all of them also offer banking services, and of course they are very powerful. They have all the money they need, and they have huge client bases. Or like Facebook that wants to issue its own new currency, Libra. So this will change really dramatically, and not in all areas, but in many areas. AI is really at the heart or somewhere involved in these new business models and services.
So we can say that AI is changing our entire world, and banking is just one of them.
Yeah, I think so. That's probably true, yeah. I don't think so. I mean, well, AI has been around for a while, but I think that in the past few years, 5 to 10 years, the progress has been enormous. Not so much in the original ideas; they are quite old, in fact. But so you can apply it everywhere, anytime, on each mobile device, and so forth. You have big data, you have high bandwidth networks, 5G, and so forth. No, at this point, I think there are not so many people in the business. I'm not speaking about engineers who work for banks, for example, but in the business, the bankers, the traditional bankers, I think they have not a very high understanding of AI today. So I think that's really very important to address that.
So we still have actually a long way to adapt ourselves with artificial intelligence.
Not a lot of time. You should hurry, but yeah, it's quite a long way still. Yes, I agree. Well, in general, each new technology also has a number of risks. So maybe one risk, which is maybe a bit counterintuitive, I see there is a risk if you want to use artificial intelligence in areas where actually other technologies or solutions are better. So AI is not a solution to all problems. I think it's very important that you don't provide a solution before you really understand the problem. And in many cases, traditional processes, algorithms, rule-based engines, and so forth, they still do a very good job. So yes, I think that there is a risk to really apply AI really where it can do the best and create the biggest value. Also, there may be a risk that you think you could delegate some responsibility or some decisions to AI too early, and maybe not understand very well if the AI makes some recommendation and you don't really understand why. This is a big issue, for example, also in health diagnostics, where you want to know why why the conclusion of the AI is such or such. So very often in machine learning, it's almost impossible to understand why there is a decision. So that may be difficult. And then of course, if you think about customer interaction, there are issues about privacy, data protection involved. And in many countries and cultures, people don't like to be profiled by the bank, even though they maybe heavily use Facebook and WeChat and so forth, where they don't mind to give a lot of their data. But it's still a difference to give a lot of data to a bank, so that you think you're really kind of transparent and the bank knows everything about you. So that's certainly also a risk. It certainly creates new job opportunities in the, for example, data analysts, data scientists, AI expert, machine learning engineers, software engineers who know how to design and develop and engineer machine learning systems. It will also change the existing jobs even more on the business side in the banking, because they will have to learn to work together with AI. For example, one of the example I gave you is a software robot maybe checking compliance data, analyzing contracts. Actually, this can be thought of like a staff member of the compliance team, and you will also have humans in this compliance team. So they will have to learn to work together with AI to know where the strengths are, but also to know their limitations. So I think that will also change the jobs, and of course AI may also make some of the jobs obsolete, especially if they are really very routine-like, repetitive jobs. So some of these jobs will disappear, and people will have opportunities to learn new skills and to maybe become also users of AI and create new job profiles. That's a very important point. I think fintechs, and when we think about fintechs, we typically think about startups, like in a brick building, like it seems you are in a brick building, you have a brick wall behind. So kind of, very trendy, innovative. And so I think they have a great strength. Startups, the fintechs also, they are very agile. They are a little less risk averse than traditional banks. So I think they also have the courage to try new things. Maybe they have a little less mental legacy. What I mean by that, when you're working in a bank, I have been working in banks for 15 years, and you start seeing the risks everywhere because that's just it's a risky business, and it's doing with a lot of money and wealth of people and so forth, and very strong regulations. So I think a fresh look at some of the products and services in banking can be very helpful. So I think the fintechs play a very important role. They also have many of them are founded by millennials, and millennials, some think yes, we can do it, we can conquer the world, and I think that's a very good attitude to start up a fintech. This is more, let's say, the cultural point of view. In terms of technology, of course, if you start a new fintech and you start building a system from scratch, it's much easier to incorporate AI and machine learning and these type of technologies than to integrate new technologies into a 20, 30 or even more years old. So it's old technology. They don't have APIs where you can connect to. So it's much harder to integrate these new technologies very, very efficiently or reliably in old IT infrastructures. There is one however, I think large scale innovation that really needs big budgets and it, needs big business behind to finance big projects like Libra, the new currency by Facebook, or some blockchain technology, which is not AI, but just to give you an example. So I also see that many of the very big global players, they are very innovative. Maybe they have their own innovation departments, they have their innovation hubs and so forth. So they are also driving innovation, and they really have a lot of money to do that. And on the other hand, I also see some very small banks, local banks, who are very creative, very agile, who also pursue very interesting aspects. But yes, I think fintechs, they definitely play a very important role in driving the innovation. So let's read the crystal ball, right? Maybe let's look at the example of robo-advisory, which was a very hyped field where you think, you can replace the human advisor, wealth management advisors for customers. Actually, it didn't happen for various reasons. Also, I think for reasons that people like to interact with people. You share emotions, you share a good joke, you like to have lunch with your advisor if you are a very rich person and you have a lot of wealth to be managed by the bank. I don't think that these people would like to be advised by robots. So I think I expect men and machines to coexist in banking for quite some time, especially when it is about advisory, relationship management, decision making, and so forth. Financial planning, where you talk about your future plans. You maybe in 10 years you would like to buy a house. In 20 years your firstborn child wants to go to university. So of course, you can do a lot of that in expert systems, AI-based systems, but I think there will always be a human touch that is needed, and will increase loyalty of customers to banks. So is this prediction still true in 10 years? I don't know. I mean, AI probably will get better and better, and maybe even understand better also emotions and moods. So, but then I think there's always the questions, why would you want to do that if you are there at this point? So, well, in general, I mean, the impact of new technologies is often underestimated, and the speed is typically overestimated. Like self-driving cars, I mean, by some predictions, we would just see self-driving cars in the street, nothing else. It takes longer. It will be huge. It will be a revolution. It will be a disruption to the industry. but it takes longer. So I think 10 years is actually it's far away, but I don't think it will change fundamentally, especially in all kind of customer interactions. And so I believe that humans will still be around in banking for quite some time. I cannot tell if it's somebody with a technology background or if it's somebody from a business background, because I think the answer would depend slightly on that. I think if you come from an engineering background, and I think it's very important to be familiar and very skilled with all these new technologies like machine learning and so forth. And in a lot of banks, they are hiring people like that because they understand how important it is, and it is difficult to find the good experts. If you're from the business area, then I think, and if you're already working in a bank, put forward the ideas, make suggestions, and don't be afraid. I think most banks who are not really very old-fashioned, but really want to go for the future, they will be very happy about young people who really are pushing in this area.
Thank you.
One example that comes to my mind would be maybe InvestNet and Yodlee. They use, far as I know, they use a peer group analysis of the crowd to better understand maybe the needs and interests of an individual customer. So I think that could be an example of behavioral finance. And then, of course, another interesting field would be to make macroeconomical predictions. I have to admit I'm not an expert in macroeconomics, but I'm quite sure that might be interesting if you make predictions and analysis. So, I mean, traditionally you have to done many multidimensional regressions and so forth, and some areas in Bayesian logics, it's very similar to that. So I'm quite sure there are interesting applications for that. Yes, I think it's really next big thing. Just to be modest, I would consider myself an expert in quantum physics, but not in quantum computing. So, but what I know is that, of course, quantum computing can be used to solve certain problems can almost not be solved by traditional silicon chip technology. So yes, I think that would offer. I mean, encryption is an example where quantum computing can be used, and many other nonlinear problems and ambiguous problems that have certain uncertainty. And AI, I mean, has a lot of these aspects as well. So I'm pretty sure once quantum computing gets more and more mature, we will see some very interesting applications also in the field of AI. Some examples of robo-advisors and also, some example I gave you about sentiment analysis of information in the markets. So yes, that making good choices. The influence of different factors, I mean, that would be the holy grail, right? If we had a system that really can predict, for example, the stock market prices, that would be the holy grail, and the kind of make the stock markets probably quite meaningless if that really works. I think AI and machine learning will help to improve more and more the quality and the reliability, robustness of those algorithms, and in the area of personal investment decisions for individuals who just want to manage their wealth. I think there are some very, very good examples already around. However, I also have to say I'm a little bit ambivalent about the robo-advisors, as expectations were really inflated and very high, and in many robo-advisors there is no AI at all or very little AI, and there is actually not a lot of wealth, not a lot of money managed by robo-advisors worldwide, even today.
Do you think all banks will start to use cryptocurrency in the future? Very popular subject.
It's not about AI. No, no, just kidding. Yes, I think so. I think so. I mean, the cryptocurrency is a concept that has evolved over time, and I think there's so many different concepts now that are actually quite far away from Bitcoin, which is the original, the very first cryptocurrency. Now you talk about stable coins, or you talk about a currency like Libra by Facebook that is, that has actual assets that's backing the value of the cryptocurrency, and it is an exciting new asset class. So many people they are interested in it as an asset class. So yes, they will survive. They will get more important. Will they replace real currencies? I'm not so sure. I mean, that's a question you have to ask the Federal Reserve boards and the other reserve banks, national banks in the world, because it takes away power from the national banks and the reserve banks, and that's not so easy to do. There's a lot of legislation needed to. It's like with cryptocurrency, that's a real challenge for regulators to deal with new technologies, because technology is much faster. It's faster than the business usually, but once the business catches up and embraces the new technologies and start using it, then it's the regulators that lag behind, and they try to regulate. I remember one example when I want to introduce as the first bank here in Liechtenstein and Switzerland the client onboarding and identification of customers using a system by video conference. So the customer would just hold his ID or his passport into the camera, and the camera would, using artificial intelligence, would detect if the ID is a fake or not. It took much more time to get the regulation in place to allow for that than it took to put the system in place. So we had to wait actually before we could start with the using the system. And similarly with AI, one example I touched on was the question of liability and accountability, also legal responsibility. For example, in countries I know best in banking is Switzerland, where a compliance officer, if he makes a mistake, if he's not really diligent enough and checks the background of a customer, and it later turns out that this customer is a criminal or is maybe corrupt or uses money from criminal sources and does money laundering, the compliance officer, if really he wasn't doing how he's supposed to work, he can go to jail in an extreme case. So I think the legislation and regulators, they would also have to accept that AI is kind of replacing also this type of jobs, even though you cannot put an AI in jail. So I think these are processes that take time.
So our last question: if a bank wants to start using AI, how should management proceed in order to make best use of AI in their bank?
I think it's important to start quickly. Don't be afraid. Don't hesitate. Start using some easy cases, like again talking about robot process automation, which is really quite simple and really fast to deploy. So after a few months you already have a success story, and people get excited. You can have the commitment of the management and the commitment of everybody in the bank, and you should also talk about those stories to everybody. So it's important to start fast using simple easy, fast projects, and then continue complexity. Getting maybe support by AI experts. If you don't have them in your house, hire experts. Train your staff in AI. So you will learn as a company together. Management, staff, and the company as a whole will learn to get better and better, and really get those cases that are really good business cases where you can make a lot of profit, and fail fast. Stop something if it doesn't give you the results you desire. So don't wait too long. Act like a startup in a way, to try, fail fast, and continue, and then really get to where the beef is. Get to the bottom of your value chain. Where do you create your best value? it's typically not payments or things like that, but it's maybe investment products. It's maybe wealth management, asset management. It's a loan business. So that's really the core of your banking business. So, but you should have a lot of experience before you really explore those tough cases, because then you really get to where the value is and where you also would get most out of AI. So that would be kind of the the super league of AI in banking.
So thank you, Kurt. These were the questions from our participants. And do you have any additional information to add or say something?
No, it was really a pleasure, and I also, even though it's a very special setting to talk in a webinar, usually it's more fun to be in a seminar room and having the audience in front and maybe have a drink afterwards together and continue the discussion. So we won't have that here. I enjoyed also the questions by the participants, and I also thank the patients. They stayed for the full length of the webinar.
Thank you, Kurt, for making time for us, and also for the information and answers you have provided to us today. Thank you very much. And also thank you everyone for joining our webinar. Thank you all for joining us today. Have a great evening.